Let's talk about stocks. There may still be a few that you want to track, and Zee is one of them. It has finally entered into a settlement agreement with Sony Entertainment. Well, they are expected to settle all disputes before the Singapore arbitration. Richa joins in with what the brokerages have to say. Richa, there's finally an end to this long-drawn story, marriage, divorce, whatever you want to call it.
Right, you're right, Samina. Good morning. As you rightly mentioned, the settlement between Sony and Zee has come to an end. Both of the parties have relinquished their rights to file any claim against each other with respect to this kind of merger. Now, going back to the history, Sony and Zee had come out with a merger which was approved by the National Company Law of Tribunal back in August 2023. This was approved by the bench. However, in January 24, Sony had terminated the merger, citing reasons and non-compliance by Zee Limited, and they had also sought $90 million in termination fees. However, yesterday there came a notification where both the parties have mutually decided not to file any claim, and this is positive for Zee, as it will now have to, will not be required to pay this 90 million termination fees. Now, coming to the brokerage house recommendation, we have two extreme recommendations, starting with Citi. Citi maintains sell rating because it remains concerned about the potential impact of the cost-saving measures. Now, Zee had also told in the last call that it will shift its focus to having constraint on its cost to maintain the EBITDA margin. It had guided for around 18 to 20% by FY26, but Citi believes that it could be very difficult for the company and could also lead to cautious investment behind content which can affect the top line as well. But then we have Elara Securities, which maintains buy with a target price of 210, implying an upside of 40%. Now, the reasons behind this is because the brokerage house expects better growth rates in the festive season, and also these cost measures which I just stated would improve profitability, and this is expected to continue going ahead as well. Improved efficiencies and lower losses will also drive valuation re-rating, is what the brokerage house believes. So, two extreme recommendations: Citi with a target price of 137, implying downside of 9% around, and Elara Securities with target price of 210, implying 40% upside.
Well, that is the two current reviews coming in on the counter. It was up about 11% yesterday. Remember, this news hit the market pretty late in terms of the trading, but 315, 320 is when this news hit the street, and the stock reacted very sharply to that news flow. But of course, there are going to be a whole bunch of counters that we want to track today, some on back of block and bulk deals as well. Anushi is joining us with a list. Anushi, a big one on Mediplus from Warburg Pincus, I know, and the stock though responded positively to that, but I believe we've got some more that we're tracking this morning.